October 19th, 1987, a Monday that started like any other. But by 4 p.m., the unthinkable had happened. $500 billion had vanished into thin air. The Dow Jones Industrial Average didn't just fall, it plummeted 22.6% in a single trading session. To put that in perspective, a drop that size today would be like the market losing 9,000 points in 8 hours. It was the largest one-day crash in history. And the most terrifying part? It wasn't caused by a war, a famine, or a revolution. It was caused by a math equation. The illusion of safety. To understand Black Monday, you have to understand the arrogance of the 1980s. The market had been on a 5-year bull run. Investors felt invincible, and they had a new weapon, portfolio insurance. It was a computerized strategy designed to automatically sell stocks if they hit a certain price. It was marketed as a fail-safe. If the market fell, the computers would save you. But there was one fatal flaw the creators overlooked. What happens when everyone's computer tries to sell at the exact same time? The feedback loop from hell. On Monday morning, the selling started. As prices dipped, the portfolio insurance algorithms kicked in. They began to sell. But because so much volume was being dumped, prices fell even faster, which triggered more computers to sell. The systems couldn't handle the load. The NYSE's DOT system, the tech that processed trades, simply froze. On the floor, traders were flying blind. They were seeing prices on their screens that were 30 minutes old. They were selling into a vacuum. There were no buyers, only a machine-driven stampede toward the exit. The birth of the circuit breakers. By the time the closing bell rang, the world of finance had changed forever. The invisible hand of the market had been replaced by the glitchy hand of the algorithm. This day forced the creation of what we now call circuit breakers, rules that literally pull the plug on the market if things get too chaotic. It was the day Wall Street realized that the machines they built to protect them were the very thing that could destroy them. Today, high-frequency trading moves faster than any human in 1987 could imagine. The question isn't if it can happen again, but if our modern circuit breakers are enough to stop it. If you want to see how a single code error destroyed an entire country, check out our video on that case. And for more deep dives into the chaos of the markets, subscribe to the channel.